Hey guys, today we're going to talk about Tila and Regulation Z. So Tila was implemented in 1968 as part of the Consumer Credit Protection Act. And the reason why was because so many people were confused over what they were looking at as far as different types of loans. We as a real estate agents are not supposed to be advertising loan terms. So please, if you just do that alone, you'll stay out of trouble. Other than that, if you find yourself advertising, you could get yourself into really big trouble. So we really want to make sure that we're doing what we're supposed to be doing. So imagine this scenario. Okay, you're a layman. You don't know anything about real estate whatsoever, and you want to get a loan. So you call one particular loan company that you know, and you say, I'm really interested in getting a loan. Can you tell me what kind of products you have? And this loan officer says, I've got the greatest loan. This is all you need. Trust me, it's what's going to work for you. It's at an interest rate of 2%. 2%, wow, that sounds amazing. You say, okay, well, let me just do my due diligence. Let me pick up the phone and call another one. So you call another one, and they say to you, 2%, that's ridiculous. Listen, that's not what matters to you. What matters to you is out of what comes out of your pocket up front. We are zero down, no money down, 100% financing, and that's really what matters to you. That sounds pretty good. You're right. I don't want to take all my cash and put it out my pocket, so maybe that is the best bet. Well, let me call someone else. And then you call a third company, and they say, listen, don't listen to 2%. Don't listen to no money down. What all you really care about, because you're going to be spending 30 years in this payment. Don't you care about how much money per month you're spending? This is the cheapest payment by far. I've got the best payment terms. Wow. I am so confused. I don't know. See, what happened was those three lenders failed to disclose the full loan details. And that, my friends, is where we get ourselves in trouble. So, anytime you see an advertisement that says, buy this home, no money down, Tila, Regulation Z, says you must disclose the full loan terms. Ever hear that guy that talks super quick? At the bottom of the commercial, so fast you could barely hear what he's saying. And then, of course, the little tiny fine print when you go to the newspaper and you look at some type of advertisement. It's got the little teeny tiny print that you need like an extra magnifying glass to see. Those are the real reason, the examples, the true examples of Tila Regulation Z. So anytime you see those tiny little letters, that's exactly what's happening. It's required to fully disclose. I just saw one of these on LinkedIn the other day. One of these agents out there, not my agent, one of the agents had advertised, buy this home, because it was his listing, buy this home for no money down. Again, I don't know where his broker's at. I don't know what he's doing, but this is ridiculous. You're going to get yourself in trouble. It's a big fine per day, by the way, if you get caught. So again, Tila applies when a consumer applies for or a lender advertises some type of consumer loan. It also does apply to consumer leases. Now, I've never seen any test questions on that. You may get test questions on it, so you might want to look into that. But that's not high on my priority, really. And honestly, for your life, it's really, we don't do leases, consumer leases, as far as like rental cars or things of that nature. But we do get a lot involved in consumer credit. So they're purchasing properties for anything, personal, family, household purposes. It doesn't really matter if there's credit involved. So that does include home equity lines and mortgages and second mortgages. So that's really, really important. So if you're going to be advertising these type of things, understand what is, what the requirements are. Okay, so let's look at requirement number 1. So requirement number 1 that says in Regulation Z, very similar to your Truth in Lending or your Truth in Lending Act. That is Tila, Truth in Lending Act. I meant RESPA, sorry. So very similar to RESPA, you must provide a truth in lending statement. So in other words, your good faith estimate within 3 days of application. So anytime your buyers apply for, consumer loan, they've got to be able to receive their good faith estimate. And their good faith estimate should have a breakdown. Now remember, guys, it is an estimate, and please make sure that you explain to your clients that it is an estimate. It really could change. Good lenders, it's not going to change that much, but I mean, occasionally there are situations that may not have been addressed or may pop up, or the taxes may change, or something may not have been disclosed. Sometimes things happen, so please remind your client that it is an estimate. It could go up a little bit, it could go down a little bit, but this is what our guess is right now. We're not going to know until we get closer to settlement, unfortunately, but it's just the way it works. So again, any mortgage or deed of trust for terms longer than 1 year. Oh, and by the way, adjustable rates mortgages also apply, so that's a really big deal. So make sure that people know that as well, because if there's an adjustable rate, so we call that an ARM. If there's an ARM involved, then you've got to have the disclosure statement with that. So you got your 3 days after application, the final, and of course a final truth in lending statement is now available at closing. So they changed that a few years ago. The HUD just used to be 2 pages. But now they've extended it, and typically on page 3, every title company is different, but typically on ours, page 3 is the final truth in lending statement compared to the original truth in lending statement, so they can see the difference. And honestly, like I said, if you're using a good lender, there really shouldn't be too big of a difference. Okay, what should be on there? Okay, you got to have the name and address of the creditor, the amount financed, the itemization of the amount financed, okay? Finance charges, annual percentage rates, variable rate information, what the payment schedule is, the total number of payments, that's important. Any type of demand features that may be involved in there, the total sales price, the prepayment policy. This is big because some lenders will charge a prepayment penalty. If you have a prepayment penalty, you need to know that up front, because what happens if you only plan on living there for 2 years? That could be a problem. So you want to make sure that that's in there. You've also got to have your late payment policies, so 5 days, 10 days, 15 days. And just to let you guys know, your mortgage is always due on the 1st. So I always highly advise all of my clients to make sure that they are paying on the 1st. A lot of them will wait until the last day, but unfortunately, when they go to get a loan in the future, the lender could say that they were late every single month because they did not pay on the 1st. So I always recommend everyone pay on the 1st. Don't pay a day. Even if you're allowed to, you shouldn't do it unless you're really in a bad situation and you have to. So be careful with that. Security interest, insurance requirements, certain security interest charges, any type of contract references that must be added there, assumption policies, and maybe a required deposit information. So be careful with that. We have our hardest problems with deposits as well, making sure that they came out of the client's own bank account and making sure that the bank account was turned, the bank statements were turned into the lender. We've had problems with that many times in the past. So very, very important. All right, so the big thing that I look for when I'm looking at any type of advertisement as a broker, I'm looking for any type of loan terms that are specific. Now, if you have some that are very generic, then they wouldn't trigger disclosure. So for example, if I said, buy this home with cheap monthly payments, I could say cheap because it's not specific. But if I were to say, buy this home for $1,000 a month, that's very specific, okay? So we're talking about a certain loan product. But if I were to say, buy this home for low down payment, or buy this home for, interest rates below normal. I mean, these are all just generic statements. You could say that. As a real estate professional, I do not advise that. I 100% would not ever put that in my loans. That's not my job. My job is as a real estate professional to sell the homes, to advertise the homes, but it's certainly not to advertise loans. So be careful with that. Now, if I wanted to do like a joint marketing type of program with a lender on one side and myself on the other, then that's fine as long as the loan officer is on there and it's clearly understood that the loan officer is responsible for their ad. So let's get back to if we see specific information such as buy this home for no money down, buy this home 100% financing, buy this home for $1,000 a month, buy this home with interest rates as low as 2%. Those are very specific, and if that's the case, then it requires those are called trigger terms, and it triggers full disclosure. So be careful on your test, because a lot of times they'll say which one would not. That's always scary, because you might end up picking the right one. For me, this is kind of like the game of, I don't know if anybody's ever watched Sesame Street with 4 children. I surely have. And Elmo, my favorite, he says, he plays this little game. Sometimes the other characters play it again, but it's one of these things doesn't belong. So for me, all of the Tila questions and Regulation Z questions are always one of these things doesn't belong. So you may find that there's 3 answers with very detailed and then 1 with a generic, or it might be that 3 are very generic and 1 is very detailed, like $1,000 a month. For me, that's the easiest way. I always think of Elmo and which one of these doesn't belong, and that kind of answers the question for me every time. 3 of them are similar, because Tila really has to do with what trigger terms. All your questions are going to be on what the trigger terms are, or which one would trigger full disclosure. Of course, overall, the whole purpose of Tila is the Truth in Lending Act, is making sure that consumers are fully aware of the full details of the loan that they are taking. Because as I said before, you don't want to be in a situation where you're confused from one lender to another. Again, I would highly recommend you get to know some good lenders and of course work with good real estate agents, because for me, in my experience, lenders like to make their good faith estimates look really good, and sometimes they'll not include certain things like deposits, like your taxes and your insurance, because they don't have to put those on the estimate. And unfortunately, what ends up happening is their good faith estimate looks so much better than the next guy's, and then it's unfortunate because in the long run, the first one cost them more because they didn't know what they were looking for. So I would highly suggest that you don't get involved with the loan process, but at the same time, always be with an eye open, making sure that your client's not being taken advantage of, that your loan officer is doing what they're supposed to be doing, there's no fraudulent activity or mortgage fraud going on, because remember, you'll be found guilty with them. All right, so again, which one of these doesn't belong? If one of the trigger terms is found in one of the loan advertisements, then at that point, we would have a situation where we have to fully disclose. So what has to be disclosed? So here are all of the things that have to be disclosed. The amount of the down payment. Big deal, because if I said, oh, buy this home for $1,000 a month, but I neglected to tell you got to have $50,000 in down payment, I mean, that's a big deal, right? So that's very, very important that you disclose the amount of the down payment. The terms of the repayment, which would be like the number of payments or the time period. Is it a 30-year, 15-year? Because sometimes people will get these awesome interest rates. They're very excited, and it turns out it's only a 15-year loan, and the payments are significantly higher than, and that catches them by surprise. So this is the reason why we have this. The annual percentage rate. So remember, the APR versus your regular interest rate is a big deal. Your interest rate is your monthly, the interest charge on your monthly payments. However, the APR is a total cost. It really is the right number. People don't want to look at it because it's big and it's scary. But in reality, it's the real number. It includes your any points that you're paying, any down payment, or any type of loan charges up front. Whereas your interest rates don't include that, and that's why there's a big difference with those two numbers. So your APR is required to be disclosed. Let's just see, finance charges, we already talked about that. The amounts financed, the total payments required under the loan, penalties for early prepayment. And if the loan is assumable, that's a big one. You want to know if your loan is assumable, so in the future you'll know if someone can assume it or not. Late payment charges, and of course insurance requirements. These are big deals. We want to make sure that all of those are on there. And if not, again, you could find yourself in any type of a bad situation. So what are the penalties? If you're caught advertising no money down or buy this home for $1,000 and you do not disclose, it is $11,000 for each day of violation. I think that may have gone up to $16,000, but let's just put it this way. It's a lot of money. So you don't want to be caught doing anything of that nature. In addition, anyone actually harmed by non-compliant consumers could also be charged 25%. So if it's a lease, type of lease, it would be 25% of the total amount of monthly payments under that lease. So not less than 100, not more than 1,000. Of course, civil penalties will come come into play, and that could be a big problem as well. So make sure that you understand Truth in Lending Act. It's Tila, Regulation Z, designed to protect consumers so that they fully understand what it is that they're getting, to make sure that they, that's the loan that they wanted. Because if not, they may end up in a situation, and unfortunately, it's usually closing day, where they'll just, discover things that weren't disclosed to them, and that's never a good situation. I've been there, and I never want to be there again. So I'm sure at some point in your career, you're going to go there as well. So we try to avoid it the best we can, because that's our job, to try to help our clients out. Again, we're not the one doing the loan, so it's very difficult, but at the same time, if we keep an eye open, we may be able to catch some things that are happening. Okay, guys, so that's Tila, Regulation Z. Study, learn this part. There's questions coming your way. Thanks.